Hello everyone. In this video I'm going to show you how to find reversal zones for Bitcoin, stocks, commodities and indices. This really works over a spectrum of markets, and you can also refer to it as support and resistance. Now if it was just down to finding areas of support and resistance, trading would be easy, but it's a little bit more complicated than that. I'm going to do a couple of videos in the series, but this really is the fundamental principles of how to trade this. And these principles are based on a man called Jim Dalton. He wrote a book called, or two books called Markets in Profile and Minds Over Markets. And he really describes how to find a fair value and the most traded volume for Bitcoin. And the secret is trading volume, and volume is a indicator that is not lagging, and often people say that volume precedes price. So the most important thing that you need to understand is that there's a basic market auction theory. Now what I mean by basic market auction theory, and the easiest way to explain it is to start when Bitcoin was at $31,000, and you can see that Bitcoin was trading in a range. Now the markets, whether it be Bitcoin, stocks, commodities, indices, range probably around about 80% of the time, and it's in trend probably only 20% of the time. So the most money that you make is when the market is ranging. So what you can do is you can draw a fixed range on this range that we had right here, and we can see that there's a value area high and a value area low and a point of control. Your point of control is where the most volume has been transacted, and you can see it by this volume profile there. So candlesticks give us trading ranges on a vertical level, whereas fixed range, TPO and market profile give us where the most volume is transacted on a horizontal plane, and that starts giving you an idea of where the most fair value is. You can see here you could have shorted there, long at the value area low, shorted just above there, and you do this with confirmations. So the principle is that the market ranges until we've got extended sell pressure, and you can see here by the volume we've had the market force perceived value was that the price of Bitcoin was going to go lower, and sell pressure came in and we broke down into another range. And you can see very clearly here that you've got another range that formed right here between 23,000 and this area of 18,000, and once again traded within the value, short here, long, short, and so on, until we got an increase of buy pressure. You can see by the volume there, and we had a breakout. So we can draw another range right there until what happened, until we had sell pressure. You can see the increase in volume there, and we had another little range there, increase in sell pressure, another little range there, increase in buy pressure, another little range there, and so on, and the market repeats. You can go and see this for yourself. We had a range there, sell pressure, massive sell pressure, until we ranged in this range for quite some time. Let's go and draw that one. So from where the market broke down from the previous range into the new range, there you can clearly see this was where the previous range was. Range there for quite some time, 7th of November to the 12th of January, until we had buy pressure to break out, and here we had another range, and again buy pressure, and we had another range, sell pressure into this range, until we're right in the current range, and you can see here buy pressure, breakout, buy pressure right there, breakout, and we are currently in this range from the 17th of March to where we are currently. And that is the basics of market auction theory. You've got to realize that we will range in this at this point until we get an increase of volume. Now we could have an increase in volume at this value area high, breakout, go to another range, wait for a range to form, and then you trade that range until it breaks. So, and this is what I've been explaining. The market ranges most of the time until volume breaks price out into another range or fair value. So I'm going to go through my basic charting process, and I basically start with charting new high time frame levels if there are any new ones. I check ATIS, TPO, find nPOCs, which is naked point of controls, and those naked point of controls are untapped levels of liquidity. It's all about finding liquidity, all about finding trapped traders, and those traders will enter at a certain point, enter at the wrong place in the middle of the range, and when price goes to the extremes of the range, they'll close their trades. Large traders will trade into that liquidity, bring it down to the middle of the range again, and they'll take profits there again. So the point is not to get caught with all of the other retail traders, but trade with the bigger whales and the institutional traders. Why not trade with the big guys? Don't trade like you're trading normally and lose money. Trade where the guys are going to enter with big position sizes. Trade with them and exit your positions where they are going to exit. So check where the buy and sell stops would be, and I'm going to show you. As I said, this is a basic video. I don't want to keep this video too long, so look out for the next videos. Subscribe, check out my links for my Discord. I teach these principles, and yeah, it's the right way to trade. See where the areas of confluence lie and set your alerts. So let's start on a blank Bitcoin chart, and let's go and delete these. Actually, let's keep those fixed ranges in. So I'm going to create a group right there, and I'm going to call it volume. Okay, let's switch those off for now. So based on the principles of Jim Dalton, he talks in his book about daily levels, weekly, monthly. So let me go and teach you how to chart those. So start on a monthly time frame. Make sure you switch on your magnet tool, select your ray tool, and what you're looking for is on the monthly time frame where we've had a close. So if you look at this candle, it's a bearish candle. This is where the price opened on that day, on that month rather, and this is where it closed. This is where price opened this month, and that's where it closed. So look for where you've had a close and an open, and we're going to mark that area, and the magnet tool will make sure that it pulls to that level. So I'm going to mark that as a monthly, and let's look for another monthly area. Here's another monthly area. Just going to copy that. You can use control in your keyboard and just drag your mouse, that'll copy it. Right, 10,000. We might go to it this month, we might go to it next year, maybe in the next 10 years, who knows. But I'll mark that area. Be ready for the levels. This is an important thing. Okay, we've got a monthly level right there at 45,000. Not necessarily going to go there today or this month, but we will revisit there at some stage. Okay, so those are the untapped levels. Very important to mark untapped levels. So we can go and mark, for instance, there's a monthly level, but it's been tapped. So in other words, the liquidity has been grabbed. Sometimes, depending on the context, I do mark some of the tapped levels, but you're going to learn that context as you go along. But I want to deal with the untapped levels for now. So let's go down to a weekly. Okay, and let's select our array tool, and we're going to look for opens and closes on the weekly time frame. And this will give us more context in the range that we're trading in at the moment. Okay, there's a weekly open and close right there, and we're going to mark that. Let's copy that, control on the keyboard, drag, and there is your weekly level right there. Okay, we've got another weekly right above there at 29,000. Again, untapped levels. Okay, and we've got a weekly right above there at 46,900. I'm not going to mark it quite yet because we're trading in this range, and I want to drill down to how we can find trades and liquidity in the area that we're trading in. Okay, so the next is on the daily time frame. Select my array, and there's a daily open and close. There you can see nice untapped level at 20,000, and by the way, there's a CME gap down there. If you don't know what a CME gap is, go look at some of my other videos, and we're going to mark that as a daily. Okay, we've got another untapped daily level right here. Okay, right there, and we've got another daily there. So looking at this, we've got a weekly level that we marked on the weekly time frame, and it looked like it was untapped. But if I go to the daily time frame, there's actually an untapped daily level there at 28,300. So I could keep this weekly level in, but I'm going to delete it. Why? Because you've got to trade the extremes of the range. If I draw my fixed range again, let's do it on the 30-minute. You want to find trades at the extremes of the range. Trade where the big traders are trading, and they're not going to trade at the middle of the range. So if I take a fixed range from where we broke out above the previous level, right from there, pull it to that point. Okay, there's where our POC is, and the most fair value for Bitcoin traded over the last couple of weeks is there at the POC. You can see there's where the most volume is transacted. Not a lot of volume has transacted below this value area low. Not a lot of volume has transacted above the value area high, which means when you get to the value area low, the chances are the price is going to reverse is great if you don't get increased volume, sell volume at this point. Now, if you get an increase in sell volume at the value area low, chances are you could break out. And you really got to know your order flow to be able to establish this. That's why I use Atlas order flow. You can see and footprint charts so that you can see where the buy volume is, where the sell volume is in the time. What is open interest telling you? What is CVD telling you? But that's for a later video. Okay, so let's go back to marking our daily time frames, and I'm going to delete that fixed range. We've got another daily untapped level right here. Okay, and we've got two tapped levels there. And what I mean by tapped, so maybe I haven't explained it quite as well as I should. So there's a daily level there, but we've came down, we've gathered the liquidity. The guys that went long here would have closed their trades when price came back and reversed. Their longs would have been stopped out, re-entered as a short, and the big guys buy up that liquidity. That's why you see these buying tails here. There's another level here that has been tapped, and same thing happened. They want to buy the breakout where they should be shorting really that value there. And what happens when the price comes down to that point? The guys that entered long here or in the middle of the range close out their trades. Those trades re-enter as shorts, and the big guys just buy up that liquidity. And you can see that by those buying tails and those selling tails. Okay, so let's drill down to a 30-minute. Okay, let's look at the next thing that I do in my chart. Check Atlas TPO, that's time, price and opportunity, and nPOCs. So POCs, as I explained, is the point of control, and the nPOC is an untapped level. So those nPOCs, before I do that, let's go and create a group of drawings there called high time frame levels, and I will go and turn those off so that as not to create confusion. Okay, so what you can do if you've got the paid version or a pro version of TradingView, you can go to your indicators and just turn on session volume profile. So that session volume profile will basically give you sessions when the trading session opened at 12 o'clock UTC to when it closed at 11:59 UTC. It's going to draw our daily sessions. So I'll go and switch that on a 30-minute time frame. Just takes time to do that. So each of these is a day's worth of trading. As you can see, they're from 23:30 till 23:30 or 12 o'clock. Okay, this is the UTC time frame. My time zone actually is UTC +2, but I've put this on UTC so you can see. So for this day, we could have actually taken a short scalp there, a long scalp there, a long scalp there. And notice how, as we've just come down on the 30-minute time frame, how it's bounced off the previous day's value area low. Now if I go and turn on my high time frame levels, I can see that these trades that you could have taken your long, short, short, long are scalp trades. So what we want to do is we want to create a bigger swing trade. So if you want to find the bigger swing trades, what you're going to do is draw your fixed range and find the value area lows and the value area highs. And if I turn on my high time frame levels, you can see these dailies correspond with the extremes of the ranges. So I'm going to actually remove this daily here because it is not really close by to the value area low and the value area high. So remember, you want to trade the extremes of the ranges. If I go and turn on my session volume profile, you'll actually see that a lot of the value area highs and the value area lows correspond with our range value area high and value area low. So there's two types of traders: smaller day time frame traders that take scalps in and out of the market very quickly, and the longer term time frame traders which will trade the extremes of the current range. So you're going to even get longer time frame traders. So if I zoom out to a daily chart, I can go and chart or pull this whole fixed range from the drop at the 13th of June all the way to current price action, and it will give us the value area high for this range, which at 23,700, and the value area low. So you could wait for all of the liquidity to be taken out and then do a longer term time frame trade if price comes down to that point, and know that there is a possible reversal area right at that $23,700 area. And there we've got confluence with our daily level and our weekly level, and there's a daily at that point of control. So as you start learning to chart these levels and looking in them on a daily basis on your charts, you'll find out how to trade them. If you're not sure how, check the links to my Discord channel and I'll teach you how. Okay, let's turn off these high time frame levels. I'm going to delete that fixed range, and let's go back to our 4 hour. Okay, so coming back to our session volume profile, you can see on the daily time frame where these naked point of controls are. Now these are massive areas of liquidity. Let's delete that fixed range. So I can see here right at that $26,600 level, there's an nPOC or POC that hasn't been tapped. I'm going to turn off my magnet tool. That's a point of control, an area of liquidity that hasn't been tapped. You can see we've come close by to it, and every single time we've actually front run it. In other words, we haven't touched it. So I am still waiting for this point of control to be tapped. Let's rename that to a daily nPOC. That's a daily naked point of control. So I still want to see price come down and revisit this level. So you'll see that if we scroll back, these session volume profiles will go to a certain point. Okay, let's scroll back. So it's given us quite far back. Okay, they right up until the 20th of July 2022 is when the session volume profile is going to give you history until. Now that doesn't help us for when we're trading above these levels of $28,000. Why? Because price has come down from that point. Now you can go and manually draw these ranges. So if I draw in this range manually, right there, okay, it will give us levels to trade once price gets there. And it's very interesting. You can see this value area low, the current price actually rejected from that value area low. And this is a point of control that has not been tapped, so we can actually mark that point of control right there as a daily nPOC. So you know that that is an area of liquidity. But to find these areas a lot more accurately, I use ATIS. So if I look at this BTC USD chart, there you can see These are basically daily time frames split up into value area highs, value area lows, and your point of controls. And there you can see that's that $26,600 level that I spoke about earlier. That's an nPOC. I will wait for that to be tapped because this is an amazing area of liquidity. These nPOCs and these value areas act like magnets to price. Just places where people will close out their trades, enter their trades. So you'll expect if price comes down to this point and we don't have an increase in sell pressure, there will be a reaction there. Always look for a reaction on these levels. Don't set limit orders. So if I go and zoom out, okay, I've got 30 days of history. Let's go just zoom out and see. And here we go. You've got a volume point of control right there at that $24,800, $850 level. Got another volume point of control at 22,400. So when price comes to these levels, you'd expect a bounce if you don't have extra sell pressure. So make sure that there is buy pressure at these points. And the way that you do that is you look at your order flow. So you can see by price changing and buy pressure coming in, yeah, very, very important to look at those levels, but that is a video for another day. So let's go back to value areas. You check your value areas, find confluence with previous day, high time frame levels, fibs, and nPOCs. So let's go and turn on these levels on my chart. Okay, so we've got nPOCs there. So I've drawn just my two nPOCs. I'm not going to go and draw all of them because this video is going to be quite long. So let's turn back on our high time frame levels. And there we can see, okay, we've got a nPOC there, close to a daily. nPOC there, very close to the weekly. Isn't that interesting? So the more levels you have, the more chances are for you can get for a reversal. So you can start drawing Fibonacci in here. Look at your golden pockets, look at your 75% level, your 25% level, your 50% level. But I'll do that on another video. So let's turn off our session volume profile. And I'm going to go back to my 30-minute time frame, redraw this range that we came up to, and see where we've got confluence. And look at that. We've got a daily level right at the value area high, so the likelihood of price reversing here is good. We've got a daily level right here at this value area low, but we've also got deviations below. Deviations is where price went out and then found a point of reversal, and again it reversed just short of this nPOC, and there again we've had reversals there. And if you look back on price action, there's always a reason why price reversed where it has reversed. Either an nPOC, either a high volume node where there's been a lot of volume transacted in a certain point, and you can actually see right here. For this range, there's a high volume node there. A lot of volume transacted at this point, and you can see support, support, support. There's another high volume node there. Support, support, support. And again, this high volume node where it's acted as support, acted as resistance at that point. Increase in volume, and we had a breakout there. So this is the basics of how to find these high time frame levels. So subscribe to the channel, smash the like button, because I'm going to give you more videos like this. And if you haven't seen my Discord, I give levels daily in my VIP channels for my VIPs, Bitcoin, how to trade TPO, how to trade volume, and this is a free Discord channel. So if you want to get VIP access, make sure you use my links for Bybit. I'll give you access to exclusive members areas. And yeah, trade the extremes of the ranges. Don't trade in the middle of the range. One last thing I want to show you is what I go and do, and to find areas of liquidity, is look at this range and look at where the lows and the highs are. So I will go and chart the highs of this range. Why? Because there's a lot of liquidity and there's a lot of stops that will sit above these highs and a lot of long stops that will sit above these lows. So I'm going to mark these areas on my chart. Okay, and I call that short stops. Why? Because the people that went short, maybe at the POC, maybe right here, maybe at this point, their invalidation, a lot of their invalidation is going to be above the highs. Conversely, if somebody has taken a long at this point, they can expect a breakout. Their point of invalidation often is going to be above the lows. So let's mark that out, and I'm going to call that long stops. So we can mark the extremes of these ranges right there, because often these are points of reversals, and you can also they're known as swing failure patterns. In other words, if price comes above this point, we trade above this point, take out the liquidity, trigger the stops. The bigger traders now sell into that liquidity, and price often reverses. Now, it doesn't work like that all of the time, but I'd say between 70 and 90% of the time you can trade off those. And then once again, I'm going to mark this area of liquidity right there. There's going to be long stops there. There'll be long stops there. There'll be long stops there. So even though you can scalp these areas for a longer term swing trade kind of trade, you can wait for these extremes to be hit. You can even mark this one in your chart. Why? Because it's close to this value area high. So we can expect this high to be taken out. We can expect this value area to be hit. And if we go and turn on our high time frame levels, once again, it's the extremes of the ranges. These are, okay, that one's a tapped one. This was a tapped one. But always trade the extremes of the ranges. Never enter in the middle of a range. So if we look at the traditional way of trading, and I often use, okay, let's mark that as stops or liquidity. And turn that off. So often what will happen is people will come and mark a chart pattern, and I trade off chart patterns, but it's not the most important thing for me in terms of finding confluence for trades. So we'll mark right there. So we've got a symmetrical triangle right here, and what they wait for price to do is to come out and break out above this point right here. Let's turn off this magnet tool. Break out above this point, take a long, and actually it's a swing failure pattern happening. They get stopped, they get a reversal here. They think, oh, it's going to go my way, and their stops get taken out and price goes and reverses in the way that they want to go. So in context, let's go and switch on our fixed range again and see where value is. So actually, if you're trying to long the breakout or short the breakout here, it's nowhere near the fair value or the place where you should be entering trades. So very, very important to stay cognizant of the extremes of the ranges, know where the stops are, find confluence with the high time frame levels, and trade those levels. So these levels, as I said, the value area high, value area low, you can scalp, but get in, take profit at the point of control, and if it rejects at the point of control, you know it's going to go back to the value area low. These are principles you learn from trading value. So guys, I want to keep this video to this point. I will do other videos based on this. I'll do other videos for my VIPs. If you like this video, please smash the like button. If you've got questions about this video, check out the links in the description for Discord. Come and ask me questions about it. I'll happily answer your questions, and I'll help you out as much as I possibly can. So I'll see you next time. trade safely, make sure you use stop losses, and make sure you trade value. Don't get trapped into trading price, because price is merely an advertising mechanism for value. Trade value, not price. See you next time.